Money Morning Rundown, Business First with Angela Miles.
Hello, I'm Fritz Goldman at SIBO Global Markets. Thanks for watching us today. Angie Miles is joining us from the UK.
Hello everybody, here I am in London. Coming up in the show, I'll let you know what's happening with Brexit, and I can tell you right now it's not going very well, but more on that still to come. Fritz.
Coming up in the show today, millennials and money. We'll focus on extreme retirement savings and what lengths people will go to. Air travel record. How long could you sit in that middle seat? A record length air travel is in the news. Amazon under scrutiny. Improper Amazon data sales practices raise red flags. Out on a limb? Our final trade of the day will look at a consumer finance company. Taking a look at the economic calendar, we'll be getting a reading from the Redbook Same-Store Retail Sales Index. Also scheduled to be announced will be the National Association of Home Builders September Housing Market Index. And the government will release the overall net capital flow numbers today. On the earnings calendar, we'll get results from AutoZone, Cracker Barrel Old Country Store, and General Mills. Here's a look at market action from Monday. On Trader Rundown, Alan Luckman is joining us from Agora Financial. Thanks for coming on board today.
Thank you for having me.
So there's a lot of discussion, of course, about the dollar in relationship to tariffs. Dollar up, dollar down, dollar all over the place. Right now, obviously, it's being pushed down.
Yeah.
You've got some trades in mind with that.
Yeah, you've seen the dollar decline here. We had a blow off top in the dollar, if you remember the Turkey crisis. But since that time, we've seen some dollar weakening. Last Friday, it got my attention. We made the lowest point in the dollar index that we had in 6 weeks. So that's given the metals markets a little bit of stability. Let's remember, gold has been holding around this $1,200 an ounce level here, and I think it's got more upside.
Now, there's some specific plays involving that?
Yeah, I'm looking at the metals. I think this is a sector that hasn't participated in the rally, obviously. Had a tough last 6 months with the trade talks. Freeport-McMoRan, copper play. So this is a stock that's down 25% in 2018, but it's unchanged over the last year. So we're standing around $14. It's dropped from a $20 top down to a $12 low. So here at 14, I'm looking at an option play. Looking at the $12 call, so it's in the money option as a stock substitution play. Break even on it's only about 75 cents higher. A January option has 4 months of time, and if we get back half of those losses that we've seen so far here recently, then the market will get to 16, and this option will about double.
So thinking about that, and it's a pretty short time frame, obviously, we're talking about an industrial metal, not a precious metal.
Right. I think you can look at that whole sector. Metals, mining, and a lot of the commodities complex has really suffered because of that recent dollar strength. But let's remember, 2017, the dollar was straight down. So this was a bit of a bounce, and I think it should be over pretty soon.
So this is all related to the trade and tariff talk?
No, not necessarily. I think we've seen dollars strengthen as our economy has recovered, but I think the interest rate hikes in the system, people were overly aggressive with more and more hikes, but if you look out to next year, they stop in March and June, and then there's no more hikes after that. So that's what strengthened the dollar, but I think that may be over for now.
Okay, Alan, thanks very much for joining us this morning. A lot of good information there.
Thank you.
Topping our news, China may balk at trade talks if the Trump administration goes ahead with plans for tariffs. Bloomberg reports that U.S.-listed Chinese stocks Alibaba, Baidu, and Weibo are all under pressures after Asian markets dip. Doctors are weighing in on the new Apple Watch feature that can produce an electrocardiogram. They warned that it could lead to unnecessary procedures and unnecessarily worry people. Apple stock traded lower on the news. Hoping not to be left out, Coca-Cola is in talks with pot producer Aurora Cannabis to make marijuana-infused beverages. The companies would likely develop health-focused beverages that will ease inflammation, pain, and cramping. A report said this move may be in reaction to some other high-profile cannabis investments in recent weeks. Deadly Storm Florence moved across the Carolinas yesterday and continued to dump rain that has nowhere to go. The National Weather Service recorded 40 inches of rainfall on the mid-Atlantic states since Thursday. Florence has insurers bracing as it slogs northward into Virginia and then on into New England. And now over to CME Group for today's Trader Tip.
Hi, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates, and those 10-year note yields finally eclipsing the top 3% level again. About the third time that's happened since May, when we saw the market really has zigzagged. It gets to 3%, it retreats back to 280, 275-ish. We see rates push up higher to 3% again and back down. And now we're seeing it again, and we are holding at that 3% level, not too far away from a key FOMC meeting when we're going to get all kinds of guidance and dots and a press conference from the Fed chair himself. And I think that ultimately right here, the buying opportunity is such that you know where you're wrong. I think a trade back to the median point of the range, that 290 yield level, is probably the higher probability, although we do get a catalyst event next week that will cause us to maybe see a shift in 10-year note yields. But ultimately, I think the Fed and the president has said this before, getting those 10-year note yields up high raises borrowing costs, which is going to put a crimp in some of the key housing data that we need so dearly to stay strong or stronger. As the Fed continues to be a less accommodative and maybe call it more hawkish. This is Todd Colvin coming to you from the floor of the CME Group.
Thanks for that trader tip. Heavy hitters in the tech space and package delivery businesses are teaming up to investigate what's causing congestion in the nation's big cities. Accenture and Microsoft are joining Here Technologies and delivery giant UPS to study the issue. Part of their effort will be to learn if ride-sharing services like Uber and Lyft are worsening the problem. And talking about tech giants, Amazon is in the news today. There are reports of their employees selling internal data under the table. Here are more details on that, along with today's other top stories.
According to the Wall Street Journal, Amazon is investigating reports that some of its employees, with outside help, have been offering internal data and other confidential information for cash that can give an edge to independent merchants that sell their products on the company's website. According to the Journal, the practice violates company policy, and it's especially pronounced in China because of the exploding number of sellers there. Brokers for Amazon employees in Shenzhen have been offering internal sales metrics and reviewers' email addresses, as well as a service to delete negative reviews and restore banned Amazon accounts. Sources tell the Journal some of those Amazon employees are in the United States. Tom Hayes is on his way out as CEO of Tyson Foods. He'll be replaced by Noel White. Hayes, according to CNBC, is leaving for personal reasons at the end of the month. Tyson's brands include Ballpark hot dogs and Jimmy Dean sausages, which have come under pressure from trade disputes that have disrupted U.S. pork exports, raised domestic supplies, and hurt prices.
In today's Millennials and Money, we're looking at what millennials are doing to prepare for retirement. Authors of Your Money or Your Life, Vicki Robin and Joe Dominguez, looked how millennials are pinching their pennies in their 20s and 30s in order to build up big nest eggs. According to Forbes, some don't mind retiring on drastically reduced means, living as a family of four off of $20,000 a year, while others store enough away to live comfortably as millionaires. But unfortunately, this effort is in contrast to 1 in 3 Americans who have less than $5,000 saved for retirement. We head back over to London now, where Angie's going to bring us up to date on some of the latest developments with Brexit.
Well, Fritz, it turns out that Brexit is much better on paper than it is in real life, because so far neither side, the Europeans or the Brits, have been able to come up with any kind of deal that's even worth taking a look at. Now, we are hearing there's a growing movement of people who might want a second chance at this. The mayor of London, for instance, Sadiq Khan, is saying that if there's no deal, and right now there's no deal, it's not even close, it will surely lead to a recession. So we're starting to hear from some of the former prime ministers in the Labour Party over here saying that they want a second referendum, a second vote, a second chance at maybe keeping these two nations together. Now, one of the things that Theresa May, the prime minister, is leaning on is a report from the Treasury that it could bring about a $12 or $16 billion boost to Britain. However, the labor movement, which wants a second vote, a second chance at this referendum on Brexit, saying that there's going to be a loss of around 500,000 jobs. So people here are really nervous, and so far it's not working out. Earlier today, we learned that Theresa May, the prime minister, is becoming irritated because so many people are talking about her job, her position. Will she even last any longer? So there's a lot of contention, and so far, no answers. Back to you now.
Coming up, we'll find out about a record-setting flight. And our final trade of the day looks at a mortgage lender. Stay tuned. Welcome back. According to Reuters, China's Southern Airlines is eyeing to expand its fleet to 2,000 planes over the next 15 years. Travel into and out of China is expected to surge to 200 million per year by 2035. Plane makers Boeing and Airbus are both courting all the Chinese air carriers due to the potential of trillion-dollar deals. And speaking of air travel, the longest non-stop flight in the U.S. was inaugurated. Here's more details about that.
Hawaiian Airlines is launching what will be the record holder for the longest continuous non-stop flight in the U.S. According to Forbes, the carrier is starting 5-day-a-week service between Honolulu and Boston. The flight time from Honolulu east is 10 hours and 15 minutes, heading west 11 hours and 40. The service will be using Airbus A330s, which can carry close to 300 people for the almost 5,100-mile trip. Tech billionaire Mark Benioff, the CEO of Salesforce, and his wife Lynn are spending $190 million to buy Time magazine from Meredith Corporation. In a message to staff, Time's editor-in-chief Edward Felsenthal says the Benioffs will hold Time as a family investment. It'll have no connection to Salesforce. The deal is expected to close in the next 30 days. In a statement to CNN, Benioff says he and his wife are honored to now have Time as part of our family impact investment portfolio. Lynn and I will take on no operational responsibility for Time and look only to be the stewards of this historic and iconic brand.
Coming up next, Market Movers takes a look at what the Fed may be planning. And our final trade of the day goes out on a limb. Keep it right here on Business First AM. And now back over to Angie.
But something that is always thriving here is the tourism. So I took a look around. Here's a few of the shots that I picked up. Yes, that's the M&M store. And I thought to myself, I could buy you M&Ms, and then I remembered, oh wait, I could just go down to the vending machine at SIBO and pick you up M&Ms. So instead, I picked you up some Irish chocolates to surprise you with. Well, now you know.
Time now for today's Market Movers with easy-to-follow futures and options trades from the CME Group.
Welcome to Market Movers. I'm Jim Murio, and today we're talking about world central banks as we are coming up on an ECB, a BOE, and a Fed meeting all within a short period of time. We're looking at using CME Euro currency options 6E as a means of hedging risk or creating exposure to these events. Joining me is Chief Investment Officer at Kingsway Asset Management, Scott Martin.
Hi, Jim.
So, are we going to be surprised first off by the ECB or the BOE?
Surprised that they actually do something right?
Yeah, okay.
Yeah, possibly. I think we'll be surprised if they follow through on language that they put out there. But I think more surprised, Jim, could be in the underlying message that they put out with respect to maybe how they're looking at their economy, how they're looking at the fact that maybe growth is going to refire in that region and what they're going to do about it.
They're in no hurry to raise rates.
No, I don't believe so. And I think that's the right look for them because right now they need to keep the stimulus or at least keep the lack of hawkish tone out there because of the fact that their economies are still in recovery mode.
Our dollar has been strong. Has that been solely a rate differential? Our rates are higher, everyone else are lower, or does it belie underlying strength to our fundamental economy?
Yes and yes.
Okay.
And I think also the trade issues too. I mean, as we've seen over the course of the summer and certainly in the beginning of the year, as these trade tensions heated up, the dollar became that safe haven trade instead of GC, surprisingly.
Yeah, it's amazing. They did run to us like a safe haven. Now, before we dive into our trade discussion, I'd like to point out, with all market movers, it's important to view these as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Price and movements will vary. When we priced these out, the DC Euro currency was trading at 116.70. Scott.
Yeah, wow. Jim, again, with the really quick toss. I love currencies. I will admit that right here and now because of the fact that so much moves currencies these days.
Agreed.
And they're just a fun area to trade. And so what I like to do on a lot of these trades on Market Movers, Jim, is two things. First, punch up the charts and see kind of where some of those key levels are, support, resistance, and see what, kind of those numbers are. And then secondly, see where options are priced on those key levels that I identify on a chart. And today I was kind of surprised by what I saw once again. So therefore, I want to take advantage of something that's very important. Specifically, Jim, I'm looking today at buying the 114 half put spread for 8 ticks or $100. But I'm going to finance that, my friend, by selling actually a call spread at 117 half for 12 ticks or about $150. So I'm going to take in a net premium of $50 because of the fact that some of these calls are really wickedly priced to the upside, which is really overdone in my opinion. The DC underlying, as you mentioned, is 1.167. It expires on September 28th, so we got a couple of weeks here. The trade risks 575 to make a potential potential 675. Now, here's the thing. I mean, if you look at the 6E euro, it's kind of in this range, and the options pricing suggests we're going to have a move maybe a couple cents up or down within that range, or towards the bottom or top. So therefore, I wanted to have some exposure on that, at least bearishly speaking, because of the put spread, that at least I financed by some of those really overpriced call spreads.
No, and I like it a lot. Buying a put spread, selling a call spread, like a covered risk reversal.
Yes.
No, and I like that. And directionally, I like it too. I think the dollar looks strong and appears to stay strong. And again, I reiterate that I think it's the rate differential that keeps going to get wider, not more narrow, it appears to me. So I'm looking at something which I think you're going to agree with, because it's basically about half of the trade you were talking about. I'm looking at buying the week 4, same expiration, the SEP 115, 114.5 put spread for 19 ticks. So it's closer to the market, but you pay up for that. And it goes off September 28th. It risks 237 to make a potential 1,012.
I like it because that was my expression too, to some degree, right? That's almost one leg of my expression here, and I think that's good. Now, the only reason I didn't do that myself is because I saw just that what I thought was a little bit overexposed on the call spread side from the standpoint of what the market's pricing in.
If we had talked ahead of time, you could have probably easily convinced me.
No, I will try to again, because simply so, if the market stays here, let's say nothing happens in the next couple weeks with the 6E euro, I'm going to net a little 4-tick premium that we can take down to the corner store, for example.
The rest of the year, 2 Fed rate hikes?
Yeah, 2 Fed rate hikes, and maybe a change in the ECB BOE language too by the end of the year too. So it's something to keep an eye on.
More hawkish?
Potentially, because of the fact that some of these options are really priced high, man.
Thanks for joining us on Market Movers. I'm Jim Murio, where we're helping to make you a better trader.
Still to come, our final trade of the day. Keep it here on Business First AM. Joining us for the final trade of the day is Joel Hawthorne with the Morning Snapshot. And Joel has some tips for us on a particular stock, and I'm actually a little familiar with this, but go ahead and tell us.
Yes, today we're going to be looking at Lending Tree. The symbol is TREE.
And that is, of course, a consumer lending organization, mortgages, and other consumer finance.
Yes.
Tell me a little bit more about it.
Well, one of the things, as you know, definitely consumer finance, lending. As we know right now, we are in the process of definitely seeing potential more rate increases before the end of the year, which is good for actual lenders. Obviously, the more rate increases that the Fed, the more increases we have, the more potential that there will be loans that will be written and more homes being purchased, and that is a boost for the economy.
Well, now, isn't possibly, though, a little bit of the overheated housing market right now, I won't say bubble, but perhaps that might have some medium-term impact on them?
Well, it's funny you say that. Actually, I think right now we're in a position where the housing market is definitely hot and looking to potentially increase. I think the more that lenders can have an opportunity to kind of loosen the purse strings, the more we can kind of see consumers going to the banks, looking to buy homes, which is always going to be, like I said before, a positive for the economy. So a lender like Lending Tree definitely can be what I look for potential to see, definitely some bullish momentum in the stock.
So Lending Tree, TREE, a good stock that has some interesting non-exposure to some of the overblown things. Joel, how would you take a look at actually participating in this particular trade?
Well, one of the things that I'm looking at for this particular stock and Lending Tree is first and foremost, they report earnings kind of end of October. Now, I'm looking at putting on an options play here that actually will go out until January. And the reason being is because the actual calls there are a little bit more expensive, but the spread between the calls is very cheap. We're talking right now, Lending Tree is trading about at 236 or so and change. The 230s are still right now what we call kind of very close to the money. So the 230s are trading right now very close to the money, and I'm looking to kind of buy the 230s but actually sell the 260s. That'll give me an opportunity to have a kind of a $3 spread. My exposure on this trade will be about a little bit more than $3 because I'm going out until January. Now, the reason why I am bullish this particular stock in Lending Tree is the fact that Lending Tree right now is just really, I think, the leader as far as kind of that mortgage financing business that we see compared with home purchases.
And of course, this isn't perhaps getting into too long a lead time, being that question mark into 2019 as far as where interest rates might head. kind of figuring that they are going to be going upwards, though.
Absolutely. I mean, and that again, that gives us until the end of the year here to see kind of exactly if the Fed is going to raise rates, and who knows, LendingTree can definitely be a beneficiary of that.
And once again, this is not a long-term play; it's let's call it a mid-term play.
Absolutely, absolutely. Looking until the end of the year, and that'll kind of give us enough time to kind of see where the Fed lies.
And kind of neaten up the spreadsheet for the end of the year for taxes and such too.
Absolutely.
So Joel, thank you very much for coming in. As we wrap it up for today, a reminder, you can find Business First AM on Facebook, YouTube, and Twitter.
Well, Fritz, I can't thank you enough for helping us out today. Coming up tomorrow, of course, we'll have our marriage and money segment. That's it for now from London. Back to you, Fritz.
Thanks, Angie, and safe travels back. I'm Fritz Goldman. From all of us here at Business First AM, have a great day.